Good morning, everyone. I am Jack Madrid, and welcome to Industry Beacon, where we feature the titans of technology shaping our future. We're not just talking about success stories, we are diving deep into their hearts and minds and to see what drives them as we decode the future one dialogue at a time. Today, we will explore the Philippine economy and its performance on the global stage, the state of AI and its impact on jobs, and key trends shaping the Philippine business landscape. Here with us today is the former chairman and CEO, and also employee number one of Evercore Asia. He is a retired investment banker who now serves as an independent director and advisor. And also, he is my friend, Stephen Cuunjieng. Good morning, Stevie. Thank you for joining us.
First, thank you for inviting me. And we've been friends for 30 years already, so thank you.
Pleasure to be with you on Bilyonaryo. So, Stevie, let's kick things off. Can you tell us, let's have a reality check. How is the Philippine economy really performing? Are we keeping up with our ASEAN members, or are we just coasting along?
Well, let me answer in several parts because it's a complex issue. We're doing better than we used to, but we're not doing as well as some of our neighbors. And it's like a tale of two cities. It's the best of times and the worst of times. For certain industries, it's a very good time. For certain industries, it's a non-existent time, like manufacturing. And the reason I think we're not doing as well as our neighbors, like especially Vietnam, Thailand, and Malaysia, and Indonesia, is because we're a manufacturing desert. Apart from the food processing industry, where we have giants like URC, Century Pacific, and Mondelez and San Miguel Food, we don't really have manufacturing. We export people and we import everything. Now, let me give an example of what that means. An average manufacturing job creates about 5 jobs for each job created. Before I get to what that means, like you're the expert on the BPO and IT industry here. How many jobs does an average BPO job create?
We use a multiplier of 2.5, conservatively.
Now, but is that sorry, I should be the one answering, not asking, but is that 2.5 a direct job, or it's a related job like service industry to cater to food? Is it a direct job?
Probably both supporting jobs and to a certain extent creating jobs.
So maybe one job directly created, one job supporting. Now, let's assume you're Toyota. You have an assembly line. Why does it create 5 jobs? First, you're in the assembly line. So you're going to create somebody in sales who's going to sell the job. Someone in accounting, parts suppliers, logistics. That's why there's really 5 jobs. And we have no manufacturing jobs being created. And what is the proof I have of that? It's power demand. The Philippines, with what, maybe by the end of the year or next year, 120 million people, thanks to our Malthusian population growth, with a GDP of close to 4,000 per capita, uses about 16,000 megawatts peak demand. Vietnam, with 96 million people and roughly the same GDP per capita, maybe on a purchasing power parity, it's a little higher than us, 60,000 megawatts, times 4. And if you look at what they're projected to need, given all the follow-on manufacturing, they will have to add the entire Philippine grid in the next 3 to 5 years. Wow. That's the difference. Now, why did I say that? Like, you look at Philippines, we've had to add new power plants. Where do people generally add power plants if they're base load plants of traditional make? So I'm not talking about renewable energy, which is very needed, but let's talk about the traditional ones, whether it's natural gas, coal, geothermal, hydro. Where do you build a new plant? Beside the old plant.
Absolutely.
Just like in manufacturing, I remember when one of my clients in Thailand was an industrial REIT, a factory REIT. And they told me, can you please tell your DTI secretary to stop falling for the BS of the car manufacturers because they say, you give us this incentive, this incentive, this incentive will open. Then they come to us and say, give us 75% of that and we'll expand our plant. Because it's still cheaper to expand where you already are. And if you don't have that manufacturing base, you can't have that multiplier effect and keep up.
It's almost like a catch-22 because one of the deterrents of manufacturing in the Philippines is the cost of power.
Well, yes. Now, that is why you've heard me and seen me read. I think we've been very badly served by this belief in the Washington consensus and that the private sector is always better. It's not better, it's different. Like, for example, if we had bad industrial policy in the past that led to cronyism and all that stuff, what was our answer? Let's not have industrial policy anymore, versus let's have the correct industrial policy. Do you think China became expert in electric cars and batteries for cars by accident? They just left it to the private sector. Indonesia, the government said no more exports of raw nickel. Everything has to be processed. Was that leaving it to the private sector? No. It was industrial policy. And the last year, the year Widodo imposed that, there were $6 billion worth of exports of raw nickel. Last year, their exports of processed nickel was 60 billion. So in 6 years, times 10. So there's bad industrial policy, and a lot of the times so what it means, what I'm really answering is, you have to kickstart it. It won't happen organically, number one. Number two, getting to power, because you asked that specific question. You know, I was asked about 4 years ago, just before COVID, to try to see if I could find buyers for Genco number 2 in Vietnam. Nobody bid, even though it was 1,000 megawatts. Why? Because the return on equity was 2% after leverage. But what does that say? The Vietnamese, and it's a challenge for Vietnam now if they're trying to entice new power, but for traditionally they said, power is a spur to bring manufacturing. Not everything has to pay for itself. There are loss leaders, there are developmental projects. Like, for example, one of the problems is if you leave everything to the private sector generally is rational. And what is the first thing the private sector wants? Profit. What happens to developmental capital, anticipatory capital? Let me give you let's look at the two of the most pure uber capitalist places, Singapore and Hong Kong. When you fly to Singapore and Hong Kong, do you have delays where you have to fly half an hour around? Yet, in anticipation of future demand, Singapore is building the 5th runway in Changi, and Chek Kok is also building its 5th runway, even though it was hurt so bad during COVID. Why? It is in anticipation to spur demand. That can only be done by government. Not everything is covered by a profit motive, because once you limit yourself to a profit motive, you are backward looking, because that means there is a shortage you have to fulfill, rather than you're spurring development and a need.
So, Stevie, as a follow-up to that, on a scale of 1 to 10, where would you put us as an investment spot compared to a Malaysia or a Vietnam?
Okay, I don't want to make it sound like the other people are perfect and we are not. Again, it's bifurcated, like in the area you're in. I think it's a very welcome infrastructure and system. In areas which are not something we're already good at, it's probably 0. In your area, it's probably 8 to 10. So rather than say there's one answer that fits all, there are multiple answers depending on the industry, depending on the location, depending on the incentives available. But there isn't like a one-size-fits-all answer, which I think is really the fairest answer.
Okay, we're going to take a quick break. Industry Beacon will be right back. Please stay with us.
Thank you.
We're back. You are still watching Industry Beacon here on BNC. And still with us is investment banker Stevie Cuunjieng. So Stevie, let's go back to the Philippine economy. In your opinion, which companies or conglomerates in the Philippines crushed it this past year, and who maybe struggled a little bit?
Okay, first, there's two answers to that. Several conglomerates have crushed it because they've been quite skilled in their horizontal integration, basically having unrelated businesses, and others have crushed it because they're focused. But the stock market gives you a very different answer, which is frankly unfair, because it's a problem. Their financial performance, if you look at their return on equity, I would say there's at least 10 conglomerates doing very, very well. But if you look at the stock market, there's basically 2 to 3. All right? SM, Ayala, maybe a couple of others. Why? It's because of the nature of our stock exchange. I mean, we're now, of the major Asian countries, the smallest by market cap and the lowest by liquidity. Vietnam, a couple of years ago, exceeded us, and Thailand and Malaysia. Like, for example, in the Philippines, you try to do an IPO over 100 million. You need a foreign underwriter to bring in the foreign institutions. I know from my own experience when I was at Evercore, in Thailand and Malaysia, you're north of 200 before you look for a foreign underwriter. Why? In those countries, local buying is a majority, usually 60 to 70%. Here it's flipped. Foreign buying is 60 to 70%. You will say that's good. I'll say no, it's not good. Because it doesn't reflect more foreign buying. It reflects less local buying. Yeah. All right? Because otherwise the volume would be higher. So now, what does less local buying mean? If 2/3 of your buying is net foreign, there are really no more Philippine funds. Most of the funds are regional funds. Basically, not majority, maybe 90% would be Asia, ex-China, Japan funds. So let's assume you're a $10 billion fund. You will put your 10 billion across Asia, and you will basically slightly overweight or slightly underweight the market weighting of that country. What do I mean? The Philippines is roughly 3%. So if you're a $10 billion fund, you're going to put 300 million, give or take, in the Philippines. If you're a bigger country where you have 10% market weighting, you'll put $1 billion, 3 times. All right? Now, the problem with then having 300 million is you want to be able to buy stock without driving the price up, and be able to sell the stock without driving the price down. So you limit yourself to the giants, which have high market cap, preferably above $10 billion, but at least $2 billion, and liquidity of at least $500 million. So then it becomes self-selecting. Let me show you the banks. If you look at the ROE and the dividend yields of the top maybe 8 banks, they're not that far from each other. But you look at the price of the big 3, BDO, BPI, Metrobank. They're all trading about 1.2 to 1.6 book. Number 4 and 5 are trading below book. They're trading like 0.7 because there's no more foreign buy. But yet, you look at their loan loss ratio, you look at their cost to income ratio, you look at everything, it's decent.
So we're basically limited by the liquidity and the relatively small market cap.
Now, the access to capital, whether debt or equity, is skewed towards them. So the big become bigger. So you could say, isn't that true in every country? Yes, but when you have a lot of local buying, there is enough people to support the next tier of funds, because it will be the local people, investors, who know best about the local companies. Now, then they can eventually, on the merits, rise up and then become worth the foreign buyers. Yeah. That's number one. But number two, if the foreign buyers are only 1/3, it is less critical than when you're 2/3. So, but yes, the conglomerates have generally done well. They've been well managed, have good corporate governance, but again, it's like the giants get the giant share and the giant benefit, and the other people who are doing very well, unfortunately, are penalized.
Stevie, let's move to another topic, something that you've spoken about before. AI and job automation. So, your thoughts, job creator or job apocalypse? And which sectors do you think should brace for impact? And how do we prepare for this as a nation?
Well, all I know is a couple of, maybe about, 2017 or 2016, when TaskUs was selling a controlling stake. I wasn't the advisor of TaskUs, but I was an advisor to one of the PE firms that wanted to buy it. And by the way, my client had lost, okay? But the questions that were perpetually asked, and this was 2016, is how are you going to deal with automation? That was even before AI. And all of them said, the answer was, then automation would make us lose at least 50% of our jobs. So therefore, to keep people from being unemployed, we have to grow more than 50%. Now, TaskUs, unfortunately for the Philippines, we can get to that. If you go to India, I think you have to go below the top 20 to find a foreign-owned BPO. Here, you have to go beyond the top 20 to find a local-owned BPO. Now, if you're a foreign-owned BPO, you will continue to invest here if you make money, if it's cost-effective. If you're in India and this is the source of your wealth, you will do what it takes to keep it going. Investing, looking forward, not basically having a race to the bottom on costs, but a race to the top on value. Now, you are more expert than me in the industry. I think you've been telling me at least enough of the people here recognize that and are doing very active, serious efforts to move up the value chain. Now, as I've listened to, I'm not an expert on AI. But when I listen to people who are, like Mustafa Suleyman, and then listen to people on Wall Street Week and everything, what are they all saying is going to be the biggest effect of AI? The remaining employees are going to increasingly need to show judgment, critical thinking and judgment. It's no longer an intellectual version of mechanical work.
Correct.
It is now judgment, discretion, weighing choices. Are we ready for that? Given it's not my view, it's proven. We have an abysmal education system. Are we teaching people to engage in critical thinking, or are we trying so hard to teach them to speak ma'am sir English, which, by the way, is a grammatical monstrosity, okay? I hate it when people say ma'am sir. It's hello ma'am, hello sir, not hello ma'am sir. In fact, I used to joke, the Hong Kong equivalent of that on Cathay Pacific was the attendant would say, do you want coffee, tea? And I say yes. And then, because he said, do you want coffee or funny. Tea? No. And I remember, I was asked recently, it didn't push through, to sell a 4-star hotel in Da Nang, okay? I went there. And I remember people were, it's hysterical that 70 years after it's been settled everywhere else, we're still talking about bilingual education. The point is not language facility. The point is comprehension, because you need critical thinking and judgment. And like you go to Vietnam, everybody, Thailand, Malaysia, they're all taught in their local language, and people take very seriously English as a second language. But why are they taught in their local language first? Because you want comprehension. Yeah. You want judgment. Now, and even then, people say, oh, but what about this and what about that? I go to Vietnam. It was a 4-star hotel. It was a locally owned hotel, okay? None of the staff spoke English. So they said, would you like to have a Vietnamese massage? I said, yes. So what? The woman couldn't speak English. So she puts in Google Translate, turn around. So I turned around. So even the technology is making that less necessary. And are we ahead of the curve or trying to catch up and solve past mistakes. I mean, for me, the biggest answer to what's going to happen to us with AI and everything is, are we forward-looking or are we solving existing problems? Or are we anticipating how to deal with future problems and situations?
Certainly the biggest challenge and opportunity, Stevie, as you said, no, is really the upskilling of our people. And I agree with you. Comprehension, decision-making, judgment, collaboration, creativity. These are the important things for our workforce to thrive, no, in the age of AI. But we have one more topic, Stevie, before we wrap up. No, I want to talk about your thoughts on the ease of doing business. In your opinion, has the government, done a good job in making it easier for investors, or do we need bolder moves?
Okay, I've retired from investment banking, but I advise 4 clients directly and I sit on boards. But interestingly, I'm also senior advisor to a PE firm, regional, and senior advisor to a VC firm, which just won Best VC Firm for the year, Open Space Ventures, and the PE firm, for full disclosure, is PAG. Okay? Now, since this new administration, there's a lot more interest in the Philippines. So let me say the positive. And we are being taken more seriously. But what have both told me? I didn't realize there's hardly any manufacturing. What am I supposed to do? Buy banks and malls? And they're shocked how little opportunity. They said, so apart from food companies, that's it? That's what they've told me, number one. So there's that's PE firms who like to buy something existing versus strategics who will set up something new potentially besides buying. So if I were the government, the national government, I would push much harder for strategics to come in and set up something rather than financial buyers who want to buy something already and improve it. That's number one. But again, the problem is the implementation. Is the create and the create more law good? It was necessary preconditions. But the problem is other countries, some with success, some without, some with partial success, say we have a one-stop shop for government approvals and permits. I've been told by many clients we have one stop in every shop, one shop in every stop. You go to the local government, you need this. You go to the national government, you need that. You go to this industry regulator, you need this. And so, if it's too much trouble, you have to give them then an even a higher hurdle rate of profit for them to say, I'd rather deal with somewhere else, where it's not that it's perfect, but it's less problematic. And for me, I think the national government is making a real effort. I'm seeing real interest. Now, however, I think we need to concentrate more, not on laws, but on execution. Yeah. Number one, and coordination between local governments, national agencies, and the national government. Because in the end, it's not this guy was good, this guy was bad. It was to an investor or somebody
Correct.
coming in. What is your experience?
Correct. We have so much more to talk about, Stevie, but unfortunately, that will be it for today's show. I'm Jack Madrid. Thank you so much to our valued guest, Stevie Cuunjieng. Thank you, Stevie, for sharing your perspectives with us. Catch us again tomorrow for more enlightening discussions on Industry Beacon. You can catch BNC on Free TV Channel 31 and on Cignal Channel 24. Thank you for watching BNC, the Bilyonaryo news channel, always on top.
Thank you.